Mark Lackey comes in every week, and we talk about various things. But last week he said, hey, listen, I'm getting a lot of email about uranium. So he joins us now. Executive VP, CHF Capital Markets. Why uranium? Why so much interest in uranium?
Well, you know, Pat, it's interesting. I'd say that if you ask me the three commodities I get the most discussion on, oil and gold, which is not surprising since it's highly followed. But there's a lot of people in this province, in this country, that follow the uranium markets. And probably because Canada, up until recently, was the biggest producer of uranium in the world, now that we've been passed by Kazakhstan in the last couple of years. But there's a lot of interest in uranium, and of course the price has fallen significantly in the last couple of months. When I was last on, we were at $36 a pound. We're now down to 28.
Why the drop?
Well, you know, Pat, I think when the Japanese said in April they were going to make a decision in either April or May or June about their plants restarting, and they haven't, we've seen some sellers come into the market, and then the buyers pull their bids. It's no different than what you happen to see in equity markets. The consequence, though, has been the equities, particularly small and mid caps, have been absolutely hammered. I mean, they're now trading as if the price of uranium is down to about $18, not 28. So I think that there's been an overreaction here, but if you look on the street, a lot of analysts have become a lot more negative as well. It seems like this 2-month time period has changed people's view not only over the next year, but over the next 5 years.
Okay, but you and I have had this discussion. You're bullish that once Japan comes on stream, we're going to have tremendous demand.
Right. And, you know, Pat, I'm only bringing back 8 reactors this year in Japan because so far they haven't made an announcement. So I'm
8 of how many, though?
56.
56, okay.
So I'm being pretty conservative. The one thing people forget is that there's actually 74 reactors being built around the world right now. And some of those will be in commission in the next couple of years. So that demand seems to be missed by some people. Plus, this fall, we always see at the time in the fall where there's at least some buying by utilities. So I think we do move back up, Pat, to 36 by the end of this year. And then I've still got 50 at the end of 2014 and 60 at the end of 2016 and $70 in 2017, which is not the norm on the street these days. There's a lot more people in that 40 to 45 range going out.
Oh, okay, now you talk about the 74. What happened to that whole, you know how the Russians had the conversion into passive uranium?
Right.
Where are we in terms of the supply side?
Yeah, now the Russians, of course, that's ended. Yeah. They are keeping a lot more of their uranium for their own sales within Russia, and when they do sell some of their own reactors to other countries. So, you know, and I think here's on the supply side, Pat, that's interesting you point that out, because Kazakhstan is certainly slowing down. Why? Well, they can't make money at $28. In fact, about the only place in the world you can make money at $28 is the Athabasca Basin. So I think people should recognize that there have been a number of projects now that have been delayed. I say we're taking about 50 million pounds out in the next 5 years. And so between Kazakhstan and Namibia and Australia, there are now significant delays in terms of new sources for uranium. So if we can get rid of this small overhang, which is largely caused because of the Japanese situation, I think we are definitely going to see upward movement in prices because, as I said, there's not the supply coming out that we thought there was going to be in the next 4 or 5 years.
Yeah, very similar to when gold dropped down to $400. I remember that, and everybody said, hey, I'm not going to get gold out of the ground anymore. Well, and then when on its way up, it took a long time to get that stuff ramped up.
It has, Pat, and it's interesting you say that. I mean, I would even argue today that gold supply does not match the price even today to many regards. So I think you're right. On uranium, I think it's going to be a catch-up game, and that's why I think if you play the right companies in the right jurisdictions and the guys that have money, that's the place you should be. Because I would say right now, Pat, this might be the best opportunity to buy uranium equities in the last 10 or 12 years.
Okay. Now you got some ideas.
Right.
We've talked Forum before. And
that's right.
Is that your top pick then?
Yeah, it is. And the reason, Pat, I mean, there's a couple of reasons. First of all, they've got over $3 million in cash. So they've got plenty of money to do any of the work they have to do over the next 3 or 4 years.
$3 million in cash. What's the market cap on the exchange?
About 6 and change. So it's about half the company is cash. Yeah. Which, I mean, we never used to see that, but in this market, we're seeing far more of that. And that's another reason why I think these companies look attractive. They've got some excellent projects in the basin. They're doing some drilling now. I like the Northwest Athabasca Basin project. I also like their project that's beside the Fission and Alpha Find. So good management team, experienced, and they've got solid JV partners. So again, here's a company, Pat, that's going to survive. There are people in the basin and other places who I think may not survive in the next year The guys that don't have money or don't have backing have a problem because, you know, I don't have prices exactly skyrocketing here in the near term.
If I'm a senior, like a Cameco or something like that, why wouldn't I buy these guys? If they're $3 million cash and $6 million market cap, I could step in and get a decent asset for a cheap price.
Well, you know, Cameco has two schools of thought here. I think that if they looked at a forum, they'd say, hey, that's advanced, but we'd like to see them do even more drilling, build up the resources, and get to the point where they make sense. I mean, if Cameco was going to buy anybody right now, they might look more at a Denison, who's a producer, or they might look at Fission, who's had this huge find. But you make an interesting point. They haven't done really too much in the acquisition game, although there's been a few acquisitions in the last year. We saw Strathmore get taken out by Energy Fuels, for example. So there will be more of this M&A activity, especially among companies that look like they've got something pretty impressive in good jurisdictions.
Okay, next one, Lakeland Resources.
Again, another Athabasca play. All of them are Athabasca plays for that reason. It's the cheapest costs in the world. Lakeland has money, and they have capital market support behind them with their partners. So again, these guys have a good project. They have excellent management. They're going to survive. And I think that's, again, the important aspect here. And this company, again, has also been beat up, Pat, given what's transpired in the last 2 months.
Okay, when you say they've got partners, what does that mean?
Well, in fact, I mean, they've got a capital markets company behind them with deep pockets. They also have a JV partner, Declan, another well-financed uranium company is their JV partner. So yeah, they have partners both on the JV side, and they have people and investors behind them that have deep pockets that believe in uranium. And that's the problem for some people, Pat. They have no JV partner, and they don't have a big partner who's willing to finance them through this time period.
And the last one is Alpha Exploration.
Well, now Alpha, if you bought the previous Alpha Exploration, which was of course taken out by Fission, you might have made anywhere between 10 or 15 times your money in 1 year.
Wow.
Yeah, that was a huge win. They kept some of the properties. The management was spun out because, you know, Fission had their own management. So they've come back with a new prospect. They're just getting started. I think it's an interesting play given these guys have done it before. They clearly have plenty of money to support them given all the money they made everybody else recently.
Did they keep all their properties in Athabasca?
Well, they sold obviously the one that was the huge winner to Fission because Fission was a partner. But they kept pretty much a lot of the other prospects because Fission, again, has their own properties. They're not going to add numerous properties when you're a relatively small company. So they kept some pretty strategic ones that they're going to start working on. They've just announced plans in the last week to set up a new drilling program and go forward because obviously it's a spin-out. It's quite new. It's only been trading a short period of time. But here again is a stock that's been absolutely hammered by the market.
So there are some good deals. Some were better deals than others. Exactly. What do you think about buying like a basket? Why not buy all three of those or
you
more?
know, generally speaking, Pat, that's what we suggest to people. If you put all your money in one situation and for whatever reason the execution isn't as good as you hope, then you've run this risk. So, you know, I would probably suggest that people like myself own 5 or 6 Athabasca plays. But you know, Pat, if you go back to 2007, there were about 65 guys in the Athabasca, and now I think the number's closer to 20. So that's another good aspect here is that over time, as uranium recovers, fewer companies means money flows into the sector, there's fewer people to buy, that's good for the equities.
Yeah, and de facto you're buying the geography as opposed to the management or anything like that.
You are buying the geography and look at the success in the Athabasca Basin, and I'm buying the people that have proven success and have the prospects. I've looked at where people are physically located and determined, is that not a better part of the basin than perhaps some other where in the basin? And that's the way we've done it.
Mark, great to have you here.
Oh, it was good to be here, Pat.
Mark Lackey, Executive VP at CHF Capital Markets.